Welcome back to Trading Hour. Well, one particular stock from the metal space that saw quite a bit of a sell-off last week was National Aluminium or NALCO. Last week, the stock cooled off from levels of almost 260 to 230. And today, once again, the stock is at the lowest point of the day, down another 2%. So almost a 10 to 12% downside is what this particular stock has seen in the last 5 to 7 trading sessions. Well, moving on, Rohan Mehta from Total Wealth PMS joins us now to discuss market fundamentals and its top sectoral picks. Thank you so much for joining us, Rohan. Now, welcome. We're almost at the end of Q3. So Q3, what is it that you're penciling as far as earnings are concerned? And especially, we'll be starting off or kicking off the earnings season with the IT pack. So what's your view over there?
Yeah, good afternoon. See, we at Turtle, we have consistently seen the numbers very closely of 750 total index of the last quarter. And what we see is, the last numbers were not very good. From 750 companies, only nearly 140 companies made an all-time high pack. Last two quarters also were not good. The financial quarters, what we see, the demands were not very, high, the sluggish, and then there will be an environmental change. This quarter has been decent by what we are listening to management, the promoters, that it's picking up very well, and let's see how the things, meet up. But I think so this quarter will be better than the last two financial quarters we had. And looking forward for on the sector side, we feel that IT and the capital markets sector. These are the only two sectors which are outperforming markets currently, and that's where the opportunity are looking forward for on the growth side.
Okay. Rohan, we have been speaking about how quarter two was weak, quarter one was weak in terms of earnings. What have your conversations been like with companies across segments? Is there a definite recovery that has come by in quarter three, and is it something that they see sustaining in quarter four as well? Just your earnings outlook for FY25 and FY26 as well.
As generally we don't see on a year-on-year span, rather we see on quarter-on-quarter. The last two quarters, what it had was one was a heat wave in the first financial quarter, and then second was a bit of rain. And this quarter has been decent, but still not that great, which we can look forward for on a margin where the numbers are going to be exponential than what we expect or the street expects. So that is the reason what we see is that now there is an extremely sectorial change into markets. I'll share you a very interesting data that, from last 20 years, there has been 14 times market has corrected more than 10%. And every time when market does a new turnaround, there is a new sector. So what we feel right now is that the capex story is now going to get paused and the opex stories is now going to get started. So now we see that Nifty IT from last 3 years has been sluggish, and now we see it has to be rising, or in the same the capital markets for it. So what we find now opportunity not more into the capex side of the story, but more onto the opex side of the story, and specifically capital markets and IT looks very, very interesting. So our expectation is that these two sectors had seen a pause area. Now the wealth creation will happen more onto the opex side of the life.
Okay, so you prefer opex over capex at this point of time, and you're liking the IT as well as the capital markets play. Which sectors are you currently wary of? So in terms of capex, taking a pause, like you mentioned, which sectors will you be booking profits from?
Yeah, so we feel that auto is a sector where the pause may happen now, or we have started leaving one or two company aside. I think so. Everything has started to see a good pause, and it needs a pause, right? Because seeing the competition side and the demand has been much more higher than the supply. Supply has been much more higher than the demand side, and also we see certainly onto the businesses which are onto the power side, energy side, which has been too expensive, and the numbers are because the competition has gone so higher and higher day by day, so it's very hard to sustain this margins and come out with numbers. So power, energy, and auto, we feel that it's a good point to take out profit and wait for, or maybe it's a sector rotation point of time.
Okay, so some sector rotation which you'll be looking at. Rohan, do you track the chemical space very closely? Because FY23, FY24 weakish, FY25, no, still clear trends which are available in terms of commentary. Companies are still waiting for destocking to get over. You think this is one sector we can look at right now because they've corrected sharply, most of these stocks?
Yeah, so if you see, I've been very closely watching chemical now, but chemical has a very variation of space, right? So we are very much interested into the agro side of the chemical because still specialty chemical has not seen that much type of bullishness into it. So chemical in specific areas where the pharma concentrate are there or an agro concentrates are there, there is looking much more better demand in comparison of or a very specific specialty chemical. So anything which has an agro and anything which has a pharma molecule, which is interesting. So certain agro spaces, chemical companies which didn't do good in last 3-4 years when there was a chemical boost in the markets are looking very much interesting. So not as in sector as a whole as a chemical, but yeah, agrochemical is a space to look for sure.
Okay, so agrochemicals is something that you like. Well, want to turn your attention to the metals as well as the material space. Metals have been a significant underperformer, at least in terms of price action. And on the other side, cement stocks have seen a bit of a comeback, at least in the last 2 weeks, on the back of price hikes that have, that have sustained. So, what is your view going into Q3, and do you see any opportunities here?
So, I was just, with yesterday was with one of the biggest TMT bar and, distributor of India. And I was talking the way the, metal prices have dropped at the lowest, specifically in the iron ore and, all the specific metal side. And they were onto the expectation that this is the lowest and that there can be a revival. So we would be expecting somewhere around, a revival in this space because the price has hit very badly. Of course, the China factor and the demand also has been sluggish. So maybe not this quarter, upcoming quarter can be interesting to it. But one space is still very much interesting in this area is stainless steel and saw pipes. So these are the two areas because again, metals are too vivid to talk about it. But in a macro side, I think so. This two space of stainless steel and saw pipes are interesting.
Okay, all right. Take that point. This is your take on the metal space. Last question before we let you go, Rohan. What about the banking space? Are you liking something in the banking financial space that you think could be the theme going forward?
Yeah, so banking has seen a revival. I'll tell you, after 2.5 years, this is the first time Bank Nifty has, or the Fin Nifty has outperformed the Nifty, specific Nifty 50. And of course, backed by backed by HDFC and of course, backed by certain banks. So we still like PSU banking space much more higher than the private banking space because that's where the value migration is happening around. So anything on the PSU banking space is looking a superior value for next 1 to 2 years. Looking forward, for what I can say is that how much growth we can expect is nearly about a double-digit growth, but there is nothing more downside to this space what we see ahead. So look at the numbers, look at what they have posted. Specifically, the larger PSU segment, PSU banking segment, has been phenomenal. So not to lose much, but a lot to gain more in coming time.
Well, thank you so much for time, and thank you so much for giving us all of your views as far as your sectoral expectations are concerned. Well, moving on, as we slip into a break, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.